Well, it's official. Mullen Automotive is no more. As of July 28, the company has rebranded itself as Bollinger Innovations Incorporated and now trades under new ticker, BINI on the Nasdaq exchange. But let's not get caught up in the cosmetics here. Despite the fresh name and ticker symbol, all signs point to this being the same troubled company, just with a new mask. Let's walk through what really happened, what we know, what we don't know, and what this could mean for shareholders still hoping for a turnaround. First, let's talk about the price action on BNI's first official day of trading. Despite some early pre-market enthusiasm, and I use the word enthusiasm lightly, the stock closed down nearly 2% on the day. For a company that just underwent a full rebranding and announced what's supposed to be a new chapter, that's not just underwhelming, that's a market expressing deep, ongoing skepticism. And the truth is, the market has every reason to be skeptical. This is a company with a history of shareholder destruction, chronic dilution, and repeated reverse stock splits, all of which have done little to improve operations or build sustainable value. Let's rewind a little. On July 8, the company, still trading as Mullen Automotive at the time, filed a Form 14A with SEC, asking shareholders to approve another reverse stock split, this time within a range of 142 to 14100. Not only that, but the same proxy also sought approval for the issuance of up to 5 billion additional common shares. Now, here's the catch. Since that filing, no official results from that vote have been shared. There's been no 8K filing, no shareholder update, and no transparency whatsoever around whether the proposal passed or failed. And yet, here we are. The company changed its name, changed its ticker, and carried on like nothing happened. This brings up the question, why now? Why this name change? And why the silence? Here's what we know for sure. On July 28, a press release was issued via Globe Newswire, not the SEC's EDGAR database, which is the usual channel for material company updates. In that release, the company confirmed the name change to Bollinger Innovations, effective immediately, along with the BINI ticker. The QZIP number for the common shares remains unchanged, which tells us that no reverse stock split has occurred yet, at least not as of July 28's close. But let's not pretend this is a typical rebrand. This rebrand is conveniently timed less than a month out from the company's Nasdaq delisting deadline. If you follow this story, you know that Mullen, now BINI, has already been warned by Nasdaq that it no longer meets the $35 million market capitalization requirement to remain listed. In order to avoid being delisted, the company must now maintain a market cap above $35 million for 10 consecutive trading days before August 26. Let's put this into perspective. As of today, estimates place BNI's market cap well under $1 million. That's not a rounding error, that's a collapse. That is decimation. So why hasn't the company announced a reverse split already? Well, if the shareholder vote did authorize it, and we can't confirm that, because they haven't told us, then management could now be planning to execute the reverse split under the new BINI ticker, effectively hiding it in plain sight. Think about how that would play out. You've just changed the name of your company. You've shifted your ticker. Maybe you attract some short-term interest from traders who are watching the new symbol. Then, once the attention dies down, you execute a 1-for-100 reverse split, pushing the price back above $1 temporarily and buying yourself more time on the Nasdaq. That's not corporate strategy, that's a shell game. And here's another red flag: the Mullen Automotive website has been gutted. Much of the company's financial archive, previous press releases, and filings have vanished or been made far more difficult to find. Even the most basic investor information has either been removed or buried under vague branding statements about Bollinger's vision for the future. This is not how responsible public companies behave. This is not investor-friendly. This is obfuscation, plain and simple. We also have no SEC filings under the new ticker BINI as of this recording. No 8KS. No updates. Nothing to acknowledge the name change. No statement of share structure. No detail on the reverse split vote. No clarification on the company's compliance strategy. So here's what we're left with: a publicly traded company that has changed its name, changed its ticker, and changed its branding, but told shareholders almost nothing about what's really going on. And if the company gets delisted, which is looking more likely by the day, the consequences for shareholders will be severe. Delisting from the Nasdaq doesn't mean the company goes bankrupt overnight. But it does mean that BINI would be relegated to the OTC, the over-the-counter markets, where transparency is even worse, liquidity dries up, and the costs of buying or selling shares increase substantially. Institutional investors typically dump delisted stocks, and even some retail brokerages limit trading on OTC names. Effectively, a delisting is a death sentence for liquidity, and a massive blow to confidence. So what could happen next? There are a few possibilities. The company executes the reverse split quietly under the BINI name, attempting to regain Nasdaq compliance through artificial price manipulation, something they've done before. They miss the deadline, get delisted, and try to operate under the radar via the OTC, keeping operations technically afloat while the share price withers to fractions of a penny. Or, in the most optimistic scenario, they pull off a last-minute Hail Mary, land a major contract or strategic partner, rally the share price organically, and stave off delisting. But let's be real, there's been zero indication that anything like that is coming. The current silence from management suggests that everything hinges on share structure manipulation, not real growth. So here's the takeaway. If you're still holding shares in this company, it's time to seriously evaluate whether there's any credible path forward here. BINI, formerly MULN, is offering no answers. It's distancing itself from its own history. It's failed to communicate basic decisions to shareholders. And it's trading at a valuation that would make penny stock promoters blush. We've said this before, and we'll say it again, a new name doesn't mean a new company. This is MULN in a new costume. The same board. The same CEO. The same playbook. And unless something changes dramatically, and soon, this could very well end with delisting, dilution, and a long, quiet fade into the financial shadows. Be smart. Stay informed. And don't let the rebrand fool you.